Hey everyone, welcome back to my YouTube channel. This is your Manisha, and in today's video we are going to solve chapter 7 quiz. This is from the financial accounting subject from Study Hub. So previously we have solved up to 6. So there is playlist being created on my channel. Go and check it out in case you have missed those videos. So let's do chapter number 7 quiz. Okay. So first question is just a second. Yeah, lean business is being sued by customer for 20,000, and the lawyer advising the business has said that customer has a good case. Business lawyer advising the business has said that the customer has a good case and it is likely that Lean will have to pay 20,000 in the damage and further 4,000 in the legal fee. What is the amount of provision that needs to be recognized in the financial statement of lean business? All right. So I hope you guys remember the definition of provision, that provision and when it is recorded. So basically it is recorded when there is a present obligation. As in our case, there is a legal case in a present obligation. Payment is probable, and in our case, the lawyer is saying that they are likely to lose. Okay. That means other party is likely to win, means we are likely to lose. And the amount can be estimated reliably. So if these three things are present, then we need to recognize the provision. So in our case, all of these three things are present. So lien is likely to pay 20,000 damage and also likely to pay 4,000 of the legal fees. So both of these the cost are expected future cost and related to the lawsuit. So 20,000 plus 4 is 24,000. So option D. So now next we have a following statement have been made about contingent assets and the contingent liability. So state whether the following statements are true or false. The first one is a contingent asset is that is probable with a a contingent asset that is probable will be disclosed in the notes to the financial statement. Next, we have a contingent liability is recognized as a liability in the statement of financial position. And next, we have a statement, a contingent liability that is very unlikely to be paid is not recorded in the notes to the financial statement. So you guys remember the definition of contingent liability and the contingent assets. So first is saying the contingent asset that is probable will be disclosed in the notes to the financial statement. So it's true. Why? Because if the inflow of the economic benefits is probable but not virtually certain, so it is disclosed in the notes but not recognized in the financial statement. So that's why it's a true. Okay. Then next we have a contingent liability recognized as a liability in the statement of financial position. So again, contingent liability are not recognized in the financial statement. Why? Because they're only disclosed in the notes. If the outflow is possible and ignored if chance is remote. Okay. So in our case, contingent liability should be disclosed, not recognized. So that's why it's a false. The next we have a contingent liability is very unlikely to be paid is not recorded in the notes to the financial statement. Yes, this is what I said few minutes ago. So if the chance of payment is remote, it is not disclosed at all in the notes as well. So it's a true. Next. All right. So Hanna holiday business that made a provision for the refund of holiday that may be cancelled within a specified time. The provision brought forward at the beginning of this year was 50,000. So this is a brought forward balance, and it has been decided that the provision at the year end can be reduced to. See, they are saying reduced to, not reduced from. Okay, so look for this word to or from. I will say you difference in a while. So reduced to 35,000 means closing balance is 35,000. So what is the difference of these two? 15,000. The movement is 15,000. So movement is 15,000. It will go to the P&L. So if it is increase amount, it will go as debit. If it is decrease amount, it will go as credit. Okay. Now, if the question say reduce from 35,000, in that case, movement will be 35,000, not 15. If it is say reduced to 35,000, in that case, we need to calculate difference of these two. 15,000 we need to credit, and if you look at the option 2 says to increase expense. Increase in expense means debit. So option A and B is out. Okay. Now out of C and D, there is one is correct. The provision of 15,000 and provision of 35,000. See, in the P&L, the movement will go, but in the SOFP, the closing balance will go. And the closing balance in our case is 35,000. If they have said reduce from 35,000, reduce by 35,000, in that case, you need to calculate the closing balance by adding 35 plus 50. Okay. So you need to check for the wording. It's a to or by. Earlier I said from. I know it's my mistake, but you should check whether it's reduced to 5,000 or reduced by 5,000. It's a difference in the wording, eh? So provision will be 35,000. Why? Because closing balance is 35,000. Which of the following define provision in accordance to IAS 37? Okay, so IAS 37, according to IAS 37, provision is your liability of uncertain timing or amount. So if something the business expects to pay but don't know when and how much, so it is not certain yet basically. So in that case, we need to book the provision. So it's very clear, straightforward definition, right? So A is your answer. But if we talk about the P, a possible obligation arising from the past event that is of uncertain timing or event. So if it is the possible, in that case, it's a contingent liability, not the provision. If we move to the 3, option C, an adjustment to carrying amount of assets. So basically, it refers to the impairment, not the provision. And the last present obligation, which is not recognized, so it's a contingent liability again. Now last, Preco is being sued for the wrongful dismissal by an ex-employee who is claiming damage for a damage of 400,000. Preco faces additional legal cost of 100,000. The company has been advised it is not probable. So here if you remember first question, it was probable, but now it is not probable that the ex-employee will succeed with this claim. So legal claim by employee was 400,000, and as our outcome is not probable, so in that case no provision should be made for this amount. Okay, so in this case we will disclose this amount but not book the provision. But regarding the legal cost, it's a certain. Okay, so it's a certain and it's unavoidable. So, that's why it should be booked as provision. So that means your contingent liability of 4,000 and 100,000 of the provision D. So we are done with this chapter as well. So stay tuned for the next chapter quiz and don't forget to subscribe my channel.